bit here, guys. Let me show you real quick. I'm just reshorting this bounce. Euro's breaking a pretty big level. I was short some dragon here earlier this morning. I'll show you on my V here. The traders that trade with me live, I just try to keep it simple for them so they always have the same visual, just like we do with the bands on crypto here. But you can see the euro. I'll even show you on cable. Cable led the way down yesterday. So kind of similar charts. I mean, the euro and sterling will trade pretty much together. But so these are both the 4-hour charts. And I wonder if there's a better, you use Zoom to trade, to stream live if it comes out better. But the TMS here, as we call it, technical market structure, right, is all bullish on cable this whole way. Here's the bands, and you broke the bands here, and then you couldn't hold this low. And so this was actually what yesterday looked like. And then euro, I was saying it hadn't broken yet, but today we are breaking. So I think this is big for the dollar. We were talking about in our group that we held pi on the dollar index. So just another great example of pi line just totally encapsulating this time component. But dollar index held pi. Most of the traders don't have that on their chart. They're all focused on the 200 that we broke. Just like Bitcoin held pi. So what I was doing here on the euro is I'm rolling back into a core short, and I'm just playing, we call this a wall, pretty good wall here on this is going to be tough for the bulls to rally this all the way back up. So I like to play these walls, and whether you look at this one, all right, or I'm just playing this one even, it's going to be tough to bounce all the way and retrace all of that without some sort of kind of move back down. So that's what I'm playing here. The 15-minute cycle is actually really low, which I typically don't like to get too aggressive when that's low like that. Let's see what the 30-minute looks like. 30 minutes still down, but it's kind of low also. You'll see. I'm going to fade this any type of bounce back up here. And then I'll be looking to reestablish a core short. I actually talked about shorting a little bit and then selling into a bounce back towards this 30 yesterday, and that's pretty much what you got. You failed right at the bands there, and now we're back down. So I think that's pretty meaningful in markets. Intermediate term, the euro moving back down. Let's see what else. Okay, Cam. What do you guys have questions on? You want to get into crypto? You want to talk global macro? There's a lot going on in the stock market and the VIX, obviously. It's been all the headlines. This was one of the most complacent trades. I mean, the VIX just hanging out down here below 8 and 9, and you can see low is 8.5. I mean, that might be the lowest the VIX has ever been. And so as soon as we really started to break the 8, that's kind of where we saw where the 8 on the daily started to roll through this 8. The first sign that it's just a lot of hot air underneath this market. I was putting in the chat yesterday, I was just killing myself because we had looked at this chart, and this was on Friday up here, and we started to break Monday. I was like, you know what? If you bought some 80 puts down here and just see if the market comes and gets you, if we break towards 200. And this thing opened up at 11 yesterday, and I never even got the trade on it, so disappointed myself. But I think from here, I think this volatility is here to stay. I think you should have, I don't think you're going to be back below 10 or 11. I think we're going to be in like a 12 to, who knows, 12 to 25 range, 12 to 20 range. Maybe it's more like a 15 to 30 range. So you can see the Dow is bouncing back up this wall. So if you bought well, you need to be a seller back into the 30 up here. That's kind of where it's going to make some sense to actually lean a little bit short. This is Dow futures 25.5 on the S&P. The S&P more like 27.75. You guys want crypto? What's up, Aaron? Is that how I say your name? Aaron? Alright, we can look at crypto. See if I can move this off actually over here. A second. That's better. I can see the chat now. Let's just start with Bitcoin. You guys can throw in here if you want to look at other markets. I mean, my traders shouldn't be surprised that we held pi exactly. It's just pretty amazing phenomenon. Cycle away, cycle back to it. Sorry, I get a little bit distracted. I'm keeping an eye on this other trade here. Fell asleep trading? That's a good risk management process. No, I don't like the way this chart's looking. I'm just gonna conk out. You can get back in. I sold all my NEO too. It happens. A lot of times I'll stop on the lows of the move just because it's you push it, and then I know right kind of where the big threshold is, where you're either gonna break hard or that's gonna be the low. And that's okay. Sometimes that happens. You always can get back in. You miss $50 here and there. It's over the lifetime of NEO. It's not a big deal. What you don't want to have happen is get stuck in another 50% drawdown. That's definitely what you don't want. We can look at NEO though. So I don't get a pie line here. Steven on the bots and the pie line? No. The reason I would say that confidently is because nobody uses a 314 period moving average. In all my days of trading and all the institutional experience of 15, 20 years of when I first started to learn trading and technicals, and then all 10 years on the institutional desk, nobody uses a moving average past 200. So the reason it works well is not because people are using it. Like a lot of people use a 200 day, so it becomes a little bit self-fulfilling prophecy. and a lot of people are focused on it, so there's orders around there. But even just trying to buy and sell around a moving average is not. That's just like a one factor, very one-dimensional type of approach. But the reason why Pi works so well in all different types of time frames and all different asset classes is because it's the time component that, yes, it's an average of the price, but it's over 314 period units of time. And so embedded in that is some cyclical ebb and flow. Whether it's a full cycle being Pi, so 314 candles later, or if it's just a matter of the distance when you cycle away from it and then you cycle back to it, there's just there's a standard deviation there over X amount of time. It just makes it tough for the market to stretch past there. But see, when we broke the bands here on NEO around 100, just a lot of work we did there. These lows and these wicks, this bottoming tail, couldn't take out the prior candle's high. Here, let me draw on this for you guys. Couldn't take out the prior candle's highs up here. I guess this was on the 2nd. Yeah, exactly. Crypto gone, exactly. What do you mean counter trend, Zach, on Euro? You got to define what your time frame is. I'm short. I don't know. What I was saying here on the Euro or on NEO, bottoming tail, you couldn't take out the high, and then we cracked that, all those tails there at 92, 95 area. So anytime you break the bands, I mean, we've pretty much shown that in the rest of the market, that you get the deeper pullback to the 200 and the Pi line. Since they changed from ant shares to NEO, I guess we don't have a 200 on here on this chart. That sucks. Yeah, I'm covering Euro short right now. Yeah, I sold into this pop up here, and then these are sells I'm covering. Have other positions on. I have a core position. I have day trade position. Might sell some Dragon as it comes back up here. 15-minute cycle is kind of low. All right. You gained 80 coins? Is that how you guys kind of say it? You keep track of the coins you gained? I just talk in terms of points. So anyway, you break the bands, you play defense, you come right back up. It's no big deal. I mean, I don't think this market's quite out of the woods yet. Daily cycle's pretty low. That's good for the bulls. From like a swing trade perspective, this daily cycle's low. When you go to the weekly on NEO is actually just rolling over. Again, there's not that much data. But a lot of the other markets, like if you look at Bitcoin, the weekly cycles have already had a pretty good move down. So on this 4 hour, well, okay, well, Jason, that was a good trade. So you guys see this is just lower highs. I mean, NEO actually held up really well up until the last week or so. But I'll get back in here in a little bit on this next pullback. Let this 4 hour cycle come back down. But here's the lower highs. This was a higher high, right? Which was tough because this trapped a lot of bulls in up here. With just nice pullback. Looked like we're breaking out again. And that's what markets do sometimes. That was a pretty good head fake. And then you went from a new high, dropped to a new low relative to here. That's pretty tough. But again, you held pie there. Pretty shallow bounce, and it's just been nothing but lower highs. So if you bought well, I don't think you want to be shy about taking some profits here. And I'll just teach you guys something real quick for those, for jumping on. You probably hear me talk in the videos about phase 1, phase 2, phase 3. And there's really only 4 formations that a market can top or a market can bottom. There's a V bottom, inverse head and shoulders, a W, and kind of like a range bottom. I won't get into that, but essentially what has to take place, it's always the same situation where you have lower lows, and lower highs, if we're talking about bottoming. And when you're making lower lows, I call that phase 1. And the reason I try to categorize it was just to, in your mind, to compartmentalize your thinking so that you're not looking at the 200 and then worried about the bands and, well, the price broke the bands, but you're above the 200, you're above pi, but you're below the bands. You can look at too many things and confuse yourself. So when you're just trying to identify the trend and when it changes, it's all about what we call it the TMS. And that stands for technical market structure. But when you're in a downtrend, the definition is lower lows and lower highs. And so when you're making lower lows, that's called phase 1. It's the first phase of the bottoming process. All you've done is make lower lows. That's not impressive to me. But then in every single bottoming process, except for the V bottom, you're going to have a higher low or a failure to make a lower low. Let's see if I can get the eraser out. Okay, I'll do this in different colors. So from here, if you just race up past this pivot on NEO, if you just trade right here after a new low, you move to a new low and you just go straight to a new high above this high, that would be a V bottom. That's the toughest low to catch because you never get another chance to buy a higher low or a double bottom. And so when you're making lower lows, that's phase 1. All right, and so phase 1, lower lows. There's your lower highs. And then if you do make another subsequent lower high here, there's a couple things can happen. You could fall back here and double bottom. You could fall back here and make a higher low and continue this way, a higher low relative to here. But in either situation, the point is that the first sign that the market's turning is you stop making lower lows. So whether that's a double bottom, whether it's a triple bottom, whether it's a higher low. You know, if you made a higher low right here, you'd basically have an inverse head and shoulders. So it's always the same stuff. But so when you make that higher low, or you fail to make a lower low, I call that phase 2 in the bottoming process. And phase 2 is always the first sign that maybe the market wants to turn. But you don't know for sure until you don't have technically a new uptrend until you get what? You got to give me a higher high before you can say, oh, okay, the trend's changing. So if the market were to do this, fall back here, hold, and then come up this way, and then take out this high, oh, okay, now I have higher highs again. Just like that happened back here. Or, sorry, right here. That's your phase 3. That's the new uptrend, is a higher high. And too many people get sucked into just buying lower lows, and all you get is a shallow bounce and then a new low against you. Shallow bounce and then a new low against you. I'm covering some more euro. All right, sorry. So a little bit of teaching there. Does that make sense to you guys? What are you guys saying? Adam and Eve? What are you guys talking about over there? Do you guys get that phase 1, phase 2, phase 3? You can look at Litecoin. Litecoin. Let's do it on GDEX. Just seeing if I want to sell any more dragon up here. Let's sell a little dragon. What I was looking at on what I was looking on pound versus the yen here is just, I've been playing this morning. I was up at 3. It's already 11:30. I was trading a little bit of London, and I sold into this drop here, and there's a little bit of a bounce. Let me show you guys a couple things. So there's a pretty good wall here from the Tokyo session. So what I like to do is we have ways to define the trend, and then we have ways to define the cycle. And so when you can identify the trend, you want to trade with that most of the time, and then obviously you want to work your size around the cycles. But this was a good chance to sell. You basically rallied right into a location to get a lower high. The cycle rolled over. You could have got aggressive on what we call the right-hand side of the cycle, and then you got the drop. But then after that drop, you put in a nice wall there, and a wall is just defined by if you take all these candles and you just make that one time frame, that's just basically one giant candle. All right, and the reason why that's important is because that's a big bearish wall that the bears have built, and so the probability is tough for the market to come all the way back and knock this wall down in the next move. in the next move. So this is the first move down. It doesn't mean you can go down here like this and then you can change direction. It's the first move after a wall like that. And usually about halfway is where you want to start to kind of time your trade to get more aggressive. So the market pretty much failed halfway, and then you got to drop to a new low. So what I was just noticing now is you have another little bit of a wall here. It's not as strong as like this one, but the cycle is turning back up, so I'm not going to get aggressive. The trend is still down, and it's going to stay bearish unless we break right here. But I don't really like that this cycle is coming back up. So I'm going to fade it a little bit, but just small, and probably scalp it around. So what did you guys ask me here? Oh, Litecoin. So the Litecoin on phase 1, phase 2, phase 3, peg to BTC. Yeah, Cameron, I mean, it does. It's actually been trading a lot more volatile, though. I did a video. We can look at it on a relative value basis. But LTC, the chart looks a lot different than Bitcoin and Ethereum. So here's the 4 hour. You have a double bottom. I'm going to come back to it. Here's Ethereum. So far, you had a new low. You dropped to just another lower low. All right, same thing on Bitcoin. You dropped to a lower low. So to me, Litecoin actually is the only pair right now that managed to put in a phase 2. Phase 2, you know, double bottom. So at least Litecoin has stopped going down relative to where it was. And so we can see on here, the market's just been making lower highs. Whether you want to use a trend line, whether you want to use something like we do, just eyeballing TMS. So do we get another lower high here with the cycle? Kind of a high probability. But to get so this is lower lows. This right here is actually phase 2, higher low. That's a higher low, right? Relative to here. But that's what I mean. You can get higher lows that just end up breaking to lower lows within. Just getting a higher low doesn't mean it's going to change trend. You're better off focusing on the lower highs and when you get a higher high. You know, you got another higher low there, and then you basically were trying to consolidate. You couldn't hold this, broke the pennant, and it was back down to more lower lows. Lower low, lower lows. And then here, oh, what do you have here? The market failed to get to a new low. That's interesting. That's a phase 2. Maybe the first sign that the market's turning, but you're not going to get confirmation until you take out this high right here, 175. Or if the market, you don't create a pivot till price moves away from it, right? So if you move away from this pivot, then your new lower high is going to be right here. Boom. And then at this point in time, if you were to make a triple bottom or make another higher low and you came up and then you took out this level, that would be your new higher high. But right now, until the market either pulls away from there and creates a pivot, you just have this pivot right here to be concerned about. Because the market could easily come up here and fail and just, you know, do one of those just as easily. So sometimes it depends how you play it. I mean, I didn't cut any Litecoin risk. I cut my BTC risk. Again, we cut our risk through 17,500. Bought a few other times. Bought in front of 10. It broke 10. Stopped out, and I didn't give it another shot here on this last move down. But Ethereum, we cut our risk. I didn't sell anything out here on Litecoin. So this is a big level at 100. You can see it on the daily we've been talking about. Yeah, so it depends how you play it. Depends how you play it. I gotta cover this dragon. We just sold the high there. I'm distracted with you guys, but I sold. Where did I sell? I sold like here, and then I just get in the drop. I just covered it. So Cameron, the kind of one of the ways to play it would just be, you could, like one of my guys, Dave, in our room, he bought into this low. He scaled in. He came out, or he bought into this low here. He came out at pi. That's the right move with this 4-hour cycle. From here, if you pull back, again, I don't want to get aggressive until we start making higher highs. So you can nibble if we get back towards 105, or time it up with the 4-hour cycle. Want to put a little bit of risk on? I mean, that's perfectly fine. You know where you're wrong, below 100. But that's what I keep saying overall in this market. I mean, just because you pull back to pi doesn't mean you get aggressive and load up the boat there. You got to turn the intermediate term back up. And a lot of times what'll happen too in markets, you'll get the move back to pi, it'll do some work, and then you'll go on even a bigger cycle down. So that's why it's not just, oh, I'm back at the level, I get really aggressive trying to put in all my position here. You can wait for this intermediate term to turn back up and start getting more aggressive over here once the market's doing this again. Because you could just easily come here, do a little bit of work, and then break pi and get absolutely crushed. So I like to just time it up with that intermediate term to get that turning back bullish. We failed right at the 8 here. You could even, if you're hedging, you could even short some BTC here a little bit. Not a bad place. Hedge the rest of your portfolio with this 4-hour cycle. Be a little bit short, and then cover it back on the break back towards below 7,000, back towards 6,500. Hey, Andrea, metal. Oh man, this is one I just kind of, I don't know. I just stopped liking this one. I don't even know if it's a favorite. It's MTL, right? I'm not sure. I'm not sure. I'm really big on the, like, even 10x even anymore. I just don't. I'm not so sure that we need a payment services plan where there's too many other big players that can do the same thing that these guys want to do. But the chart on metal, where is it? Isn't it MTL? Is it not even on Bittrex anymore? What's up, Dims? I can't remember if we've traded Ven. What? I don't understand why metal's not here. Oh, versus BTC. No, that's not it. It's on Binance. They delisted it? Wow. Why? But just because I don't like it doesn't mean it's not a good long. I'm just saying. I don't even know idea what the chart even looks like. Let's see. So metal was actually one of our biggest gainers right out of the gates. But as soon as we broke the bands back here, I was out. That was one of the first altcoins we said sell. It rolled over the first, and then it's just been really bearish ever since. It's long-term bearish. See, the difference between this chart and BTC is that you're in what's called the southern hemisphere. So if you were to actually get like a 200 or a pi line on here, it would look more like this, right? So you're in the southern hemisphere, your bands are negatively sloping. That's showing you a long-term bear market. That's why it has troubles. Anytime it rallies, it really struggles. But from a bottoming perspective, if you're looking for a move back up, which is possible, I mean, anything's possible. You do have a few things going on here. So when we talk about the TMS, okay, this was clearly a break here. This is a lower low, right, relative to there. So that's your lower low. These are your lower highs. And then you guys notice that these are lower highs, but they're near the 8. So I don't give those as much weight. This is the lower high that's lower than this high. And that's near the bands. So, and then right here, you never even closed above that high. So sometimes you'll get an intraday head fake. Twice it happened. Those are two tweezer tails, we call that, when you get two topping tails like that. Called a tweezer tail. It's just showing you that the bulls are they get exhausted and the bears just absolutely smash them back down. Euro's breaking nicely now. What was I gonna say? Oh, so so that TMS is really right there. Boom, right there. And then this is the lower high. And then same thing again, intraday. You couldn't close above that high. It's trying, it just doesn't have, whether it's the bears or, they just don't have enough to get it going. So that's where your TMS is longer term. All right. So if you could start to gain traction above 60, is that 60,000, 70,000 Satoshi, then maybe you get a new long-term higher high and maybe you can get a pop. And if you did get a pop, I would look to obviously this high, and then about halfway up this move here. That's kind of your profit targets. All right. So here's your lower lows. Okay. And then right here, what do you have right here, guys? What's this? We can look at Ven. Sorry, we can look at Ven. Right there's your double bottom. That's your phase 2. This is kind of a slightly higher high, but you still technically, from the long-term perspective, you're missing the phase 3 higher high. You don't have that yet. But that's the process. You're trying to base and turn. You're just not quite there yet, longer term. But if you the way you can kind of play that is, if you have a bullish view and you want to start building a position, I mean, there's places where you can nibble here into these lows. Where your risk is below that low. You get a swing line here. This is another setup I teach my traders right there. That's a swing line buy setup. Stop below the low. So try to kind of, when you're looking for a turn, you kind of try to follow the big candles. That was a big one. Those are the footprints of money. This was one. All right. That's kind of it. I mean, this was a pretty bearish candle right here. This was the biggest candle on the chart relative to this one. This one was really large. That's one of the largest candles going back probably since this candle. And you'll notice that that had no follow through. So sometimes when you get a large candle like that and it experiences no follow through at the end of a long run, that's your exhaustion. And sure enough, that marked the low. So we call those real money candles. But when they don't have follow through, it's meaningful, especially in the context of a long move. All right, but then this bar here has set the stage. I mean, you couldn't get back above that candle. That set the stage so far. It's a little bit of a battle. We can look at Ven. Yeah, I haven't looked into that Wabi coin. Some people are pretty bullish on it. I haven't heard of I don't think I know LCX. And this is a pretty strong chart. Definitely a strong chart. This is really the first major pullback you've had since it broke out. The daily cycle is pretty low, or I mean, was low. It's kind of on an up move already. The weekly, yeah, this chart hasn't done anything wrong at all. I mean, this is actually healthier looking than the way like the majors trade right now. I don't know anything about this coin really, but there's your base, broke out. 1, 2, 3, 4, 5, 6, 7. You basically got close to an 8.6 count. So there's an 8.6 frequency that exists. It's a derivative of pi. The global business cycle is on that same wave. And so if it exists on the yearly level, a frequency, it'll exist on the 1 minute. It'll exist on any time frame. So that's a pretty good cyclical move right there, without even having an oscillator like the stochastic. And then now, after a strong move like that, a reaction of at least 2 to 3 units is pretty natural. So if you look at that as a wall, about halfway, you basically held, very standard, healthy pullback within the context of what was a very big run. And then this is the first pullback it's had. So nothing wrong there. This was a little bit more of an intermediate term resting period here. But, you should expect this to hold right in this area for sure. And then look for the next move there. If you can't hold here, and you got these lows obviously right here also. If you can't hold this area, then you should expect a bigger pullback You know, maybe an 80% retrace of this move, something down here. But I like being long there. And you can see the direction of the 8 is descending, so that's showing you this intermediate term downtrend. You can see it on the, you'll see it on the 4-hour and hourly. Just like the market's been doing, right? You guys can see me drawing on this stuff, right? You see me drawing, right? Hope so. Held the bands, held the bands. Again, these are higher lows at the 8. Those don't matter as much to me. This one was a little bit deeper. Here you didn't hold the bands, but then you came right back up, so that's the pivot. And then there's your lower lows. You crack that low, you get the move to the 200. You may or may not get all the way back to pi. It's not, obviously it's not 100%. The point is that when you kind of break this, you fall into what I call the no man's land, and you tend to get these moves. It's a little bit tougher to trade the distance between the bands and the 200 and pi. You got to be a little bit patient on the long side, and then there's opportunities to hedge too when you get in those zones, or you could even play it short. Just different ways to play it, but clearly making lower highs. So I would say this is your pivot. If you can get above here, you get above the bands, that'll look good again. Intermediate term will be back up. You still could test pi though too, just as easily. So I'd be a buyer here, wait and see if it holds, and then look to add to it and get more aggressive if and when we start taking out these lower highs, going this way again. Because this is essentially a longer term cycle it's playing out. So you're still on the left-hand side of this cycle. It's still early. Time to be aggressive is on this side of the cycle. You'll probably see it on the weekly. Well, I don't know if there's enough data. No. Anyway. What was that other one? LCX, you guys said? What's the symbol for Wabi? Trading for coin versus the dollar. I'm not sure I quite understand that question. LEX. It's LEX, right? Oh, LCX. Oh, that was L. Oh, okay. So a question like Neo versus Tether versus Neo versus dollar. I'm pretty straight up on that. I think you guys, you know, blockchain and cryptocurrencies has so many different facets to it. The technology is trying to disrupt so many different things. It's trying to disrupt the banking system. People have this idea that it would be a currency and then maybe it'll displace and be the next world's reserve currency. But you got to kind of understand what is money versus what is an asset. You can't call something money and at the same time price it in dollars. It doesn't make any sense. So Bitcoin is an asset right now. It's still on the money. It's on the asset side of the equation. So we're pricing BTC in dollars. So at the end of the day, what are we trying to do? We're trying to make money. We're trying to make dollars or make euros or make, you know, I don't necessarily want to make BTC if BTC is in a bear market or if BTC is in a downtrend. We're all trying to really be in assets that are appreciating, and then those assets can buy you more of some other asset. That's kind of really the whole idea. So if I'm trying to make money, I'd rather view my asset that's priced in dollars. Everything else is priced in dollars for the most part. You know, so it's not a unit of account. Maybe one day it will be, but it's not currently. So to really see if the asset's doing well, I care about how it's doing versus dollars more than Bitcoin. Because obviously, if you put BTC or Ethereum in the denominator and that's really going up, it's going to distort what this coin is doing just because the denominator is increasing. But maybe this asset is just going sideways. It's not necessarily going down. It's going down relative to whatever you're pricing it in. But you could price this coin against the VIX, and the VIX is exploded to 50. It would look like this coin is collapsing. It's not. So dollars is the world reserve currency. We're pricing Bitcoin in dollars, so you should be measuring your coin in dollars if you can. No, obviously you can't sometimes because they don't have to pair it up that way. But not a lot here, guys, to look at on this weekly chart. This is a pretty new coin, huh? You guys like this one? So about halfway where the market held. That's a pretty healthy pullback. I wouldn't be surprised if that's the low. See if you can take that high out on the weekly level, and then you can think about a retest of these highs. And if you make a higher low after a higher high relative to here, you should get a higher high, just by definition of an uptrend. So take that high out on the weekly chart. You're probably going to retest here and then maybe get a shot at new highs. That's what the weekly says to me. You don't have a cycle. Daily cycle is pretty low. You're right on the bands, so you're at a big area. After this move back up, you really don't want this low getting taken out, though. So this is a swing line here. You took out the prior candle's high. You do not want that below that low after breaking the bands. Then it opens up the door to retest this candle here. And then you see you got your 8 above the market. You want to get back above the 8. And then, like I said, that's basically getting you back above that weekly spot. And then you can move back towards the highs. This daily cycle is low. So I'm not surprised we bounce after that. 1, 2, 3, 4, 5, 6. Basically an 8 count. Another 8 count there. Yeah, side coin. I'll say it. Hey Steven. Yeah, this is a new thing I wanted to do. So I have a live trading session I do Tuesdays and Thursdays. And that's for anybody that wants to go through our group coaching. It's only $3,500. We trade together for 8 weeks, twice a week. And it's designed just to help you with, everything, putting everything involved in our model, which we have a 9-hour training on our model that, once you own that, you own it for life. So you can apply it to any market. But I go over analysis, I go over execution, I go over risk. It's a 3-pillar. I call it, those are the 3 pillars of my model. But you can learn that on your own. That's $2,000. That's our on-demand training series. And the next level is I have traders that want to do this full time, or they've already been trading for a long time and they just want to get to that next level of consistency, or just they're bumping up some challenges in their trading, and so we work on all kinds of stuff together, trading live together. It's totally different than just, you know, learning from a video or, you know, looking back. It's just different when you get the emotions in your inside trades, and you see it develop before it develops. So there's so many things as a trader to work on. That's what we do in our live sessions. But anyway, I do that Tuesdays and Thursdays, and then probably for like 15 minutes after each session, I'm just going to do a live recap. That, you know, it won't be a lot of teaching. It's just kind of maybe a way that people could jump in and interact a little bit more during the week. But then Wednesdays, I'm going to do this for about an hour live. So, you know, 11 to noon, kind of catch some people maybe at the end of, if they're overseas in Europe, before they, you know, on their way home or from work or something. You know, during lunch, it's a little bit slower. We tend not to day trade through lunch hour. And then Fridays we'll be having on some webinars, a little bit more organized. I'll be doing some teaching, talking about just our programs and what we got coming up. But every time we get together, I mean, I'll talk about what I think is important in the markets, and you know, talk global macro. What's Litecoin? SC? Who was short Euro? Zach, were you short Euro? You get covered up? You make some money there? Pretty good move down. Pretty oversold near term. I took some risk off here just because it's more of a capital allocation. I just had too much in here that I wanted to put it into some other names I like more, like Salt, but it's breaking the bands. It's at that same area of the market. It's kind of do or die. So, I mean, my mentality when I trade, guys, is that, you know, I don't look at the market like the market's out to get me. I don't look at like I'm trying to beat the market. I mean, the market is so much bigger than any of us, and it's so complex. It's like a rainforest. So really the game that you're playing is against yourself. I mean, the market doesn't know what my P&L is. It doesn't know that I had 8 great winning trades in a row, or I'm at 8 losing trades in a row. The market doesn't know. Those are just like psychological things that we create, like as traders. Like, oh, as soon as I get long, it always goes against me, or you know, I can't get anything right. Every time I buy it, the market goes against me. I mean, so in reality, we know that that's not the case. Really, what you're doing is trading against yourself, which you should take that one step further and say you're trading against your process. So just like a golfer is trying to play against themselves, they're trying to stick to their process. They're trying to work on a few things when they're out there. But in my mentality is, though, I only want to give my capital and my time to something that's proving itself. So this coin's a great example, actually. This is a great example of why trying to buy lower lows just doesn't pay off. It's a waste of time and it's a waste of capital for the most part. If you're buying, like once the band's broke here, if you're just buying because it's lower and buying because it's lower, even if you bought here, yeah, maybe that's a pretty good percentage bounce. But in the context of this is a pretty weak bounce, right? Just a bounce to a lower high, and then it goes against you. You buy here, it barely goes anywhere, goes against you, goes against you, goes against you. So this is why I teach my guys. Most people don't even know that they're doing this. They don't even recognize that this is a lower low. Oh shit, I am buying a lower low. Oh, I'm trying to buy a lower low again. Oh, I'm trying to buy lower lows again. And so I work with traders on this psychology. Like, first you have to be aware of what you're doing, and this is all stuff that I've struggled through and gone through. I've gone down these roads of day trading and being like, why am I buying this? Oh, this is a lower low. Why do I keep buying lower lows? Okay, let's change that. That's not going to be in my process of I buy lower lows. You know, I only go contrarian maybe 10 to 20% of the time. Then I try to trade with the trend 80% of the time, 80-20. So the first step is to realize what you're doing, and that's why I try to put things in context, like phase 1, phase 2, because you gotta isolate what the hell it is you're doing first. You gotta be aware of it, then you gotta contextualize it, compartmentalize it, so you don't keep doing the same things over and over that aren't getting your results. So for me, that was part of the process. Like, all right, I know this is a phase 1, another lower low, lower low, lower low. And then it was just a matter of designing, like, hey, what can I call this to recognize that we stopped making lower lows here? Oh, okay, interesting. All right, didn't get a higher high till right here. That's the start of your bigger cycle back up. So there's no sense, guys, in getting aggressive. You're going to have to, if you were aggressive here and you stayed with this position, your average is way up here most likely. By the time you're down here, you're so far out of the money. You've wasted all this time. Okay, so you wasted all this time. And then you've wasted all this capital and you're in a position that's way out of the money. So if you're down 50%, guess what? You got to have 100% move just to get back to break even. It's not what you want to do. So by following a system like what I teach is, okay, well, I'm going to wait for the cycle to turn, and then the place to be aggressive is on this side. All right? And then, boom. So while you're staying away from this, and or maybe taking little shorts. Like I'm not a big fan in crypto of taking positions short overnight, because you're going to get caught in some stupid, you know, ramp up or some pump and dump thing. But if you want to take a trade and watch it for, you know, 20 hours or something, there's things to do here on the short side if you're set up to short. But this whole time that the market's doing nothing, don't put your capital into that. So I kind of look at these coins or the stock or a bond as an employee. Like, it's got to work for me. If it's not going to perform, then I just kill it. Like, I'm not giving it any more of my capital. I'm not going to give it my focus, my energy. So there's so much wasting going on trying to buy these lower lows. All you got to do is wait for this, the signs of this, and then give it your capital. And then boom. And so now you've had a pretty nice pullback, but this is just a do or die area. You either have to hold these lows, or you're probably going to be back at this base down here. And that's a big percentage drop. If you can get back above the 8 and you can get back above here, then you'll probably start another cycle up. But I wouldn't be getting aggressive till over here on this side. Anyway, guys, that's a lot. That's a lot of teaching there. When you understand, like, what you're really doing, trying to pick bottoms. You guys, sit at home on the couch and pick a bottom. See how that works out. I think you guys get the point. Euro's still going lower. All right, guys. My voice is getting worn out. I don't know. I'm gonna try to work on this stream here. This is the first time I've done it in a while. It might work better if I do it through Zoom, which is who I usually do my live room with. Or I don't know. I'll keep working on it.